US now, where US stocks fell in volatile trade last night, giving the S&P 500 its biggest daily drop in a month, as a push by some Democrats for impeachment of US President Donald Trump gained momentum. The Dow Jones Industrial Average fell 0.5% to sit at 26,808. The S&P 500 lost 0.8% to close at 2,966, while the Nasdaq Composite dropped almost 1.5%, ending the day at 7,993 points. Let's get some more on the markets. Arabile Gumede is standing by the Johannesburg Stock Exchange, and it seems like there's not good news here either, Arabile.
Certainly not a good day across the board today. Nzinga, 1.7% down for the JSE All Share, so certainly some weakness there. Quick look around as well, just at the rest of the markets really around the world, and it certainly seems like weakness is still the matter around the world. The FTSE 100 out, of course, in London is sitting down as well, 0.9%. The DAX out in Germany, 1.1% too, while the CAC 40 out in France as well, 1.5% weaker. So it's clearly some weakness filtering through. And as you noted, then Asian markets have certainly been wilting and withering as well. Uncertainty in that US market now as we head towards an impeachment inquiry into US President Donald Trump. Just how long that will take, of course, is the question at hand here. It is unlikely to be a very, very short affair in that regard, perhaps going even beyond the 2020 election, of course, in November, but perhaps trying to find a way to at least mitigate those risks. The market certainly unsure of itself for now in that regard, so certainly some weakness filtering through. Let's unpack this market picture, though, a whole lot more. We are joined by Michael Traherne, Portfolio Manager at Vestact Asset Management, as we unpack this picture a whole lot here at the Johannesburg Stock Exchange. Michael, thank you so much for the time. Appreciate it. Nearly 1.8% down now for the JSE All Share. Playing catch-up, perhaps, from yesterday, but that's a whole lot of weakness.
It's been really ugly the last couple of days. JSE All Share's been down. We had a really strong start to September, and it looked like green shoots, things feeling, people feeling better about the world. The Rand getting to 14.50 the last week is very much undone all of those gains. The Rand now back closer to the 15 levels. Just shows you a bit of negativity around globally, and emerging markets feeling the heat.
Yeah, I mean, if we look at it now, 15.03 actually to be exact. Where does the weakness sort of stem from right now, considering, of course, local news not much to write home about? Is the Donald Trump factor and the impeachment saga really affecting local markets, or is there something else at play here?
Yeah, definitely. International politics at the fore. On Friday, we saw Chinese officials leave trade talks, leave Washington early. You fast forward to yesterday, we see Brexit, the delay in Parliament in the UK being declared illegal, so adding more question marks around what's going to happen in Brexit. And then, as you mentioned earlier, inquiry into impeachment against Donald Trump being initiated by Democrats in the House of Representatives, so even more uncertainty, and investors don't like uncertainty. So when you crank up the levels of uncertainty, you see asset prices slide until things calm down again.
Yeah. Is this another time then where gold becomes, you know, the stock sort of bread for a lot of investors? Looking at that price, 1,529, it's not really shooting the lights out, even though it is a little higher.
Yeah, well, I suppose if we have a look at the board, the only green on the screen here is Goldfields, and they're up 3.5%. And it's just investors saying, look, let's go towards the gold miners. Gold miners are generally what you would call a geared play against the gold price. So these mining companies have debt, so a small incremental changes in the gold price leads to quite a big increase in their profits. So that's why you've seen the gold miners do really, really well this year. Increased uncertainty, people moving into gold miners. How long does it last? Who knows? I wouldn't want to be trying to time the bottom or top of this. So if you're a long-term investor, gold's probably not the place. If you've got the guts to be short-term, try timing market emotions, which I'm certainly not skilled enough to do, then maybe gold miners are the place to be.
Yeah, quite an interesting one, as you said then, with regards to Goldfields really just being the only one in green thus far. Let's take a look at Sasol. Now, that oil price has headed a whole lot lower, around $62 odd per barrel. Sasol itself, 4.8% weaker today. It does seem that the play is still definitely around that oil price.
Yeah, for sure. I mean, we remember, you go back a week and a bit when there was those attacks against the Saudi oil production, and the oil price was spiked 17% or 15%. Obviously, that's good news for Sasol. They produce they produce petrol out of coal, and that feedstock doesn't change, but their selling price can go up. So investors bought up the stock on anticipation of higher oil prices for longer. But Saudi Arabia coming out saying that, hey guys, we're going to have all our production back online next week. We're not going to even see much of a difference here. We'll just pump out a few more barrels than we were before. So all back to normal, and the oil price returning back to its levels where it was previously. So yeah, Sasol was a short-term blip, and it shows you again, trading is short-term. If you bought Sasol on the hopes that oil prices were going to be higher, now you're feeling the pain because they're not going to be. So yeah, tough one out there.
Yeah. Do you think, though, for example, the price now is below where it was on September 14th when those attacks happened actually on Saudi Arabia. Do we get a sense, though, that if there was another attack on Saudi Arabia, the fear then would be, okay, this may be a sustained sort of issue and war, so to speak, against the Saudis? Does that sort of leave the price above 60 and perhaps beyond for a little longer?
Yeah, you would get what you would call like your risk premium in the price of oil, and people will say, okay, this is where we think it's meant to be trading, but because there's the risk, like you say, of an attack, we're going to add a bit of a premium to the price to just a bit of insurance, so to speak. So the price actually goes up slightly, but we'll have to see. I mean, I'm fairly sure that the Saudis, you've seen a drone strike once. I'm fairly sure they're fitting anti-aircraft type defenses around their oil production. They wouldn't want disruptions. It's first of all paints them in a weak light. It disrupts the oil market, which isn't good for anyone. So let's see where this goes. But I think for now, traders are saying, look, guys, we've got tensions globally on the trade front. If that's the case, global demand comes down in general, which means prices are probably going to tend lower than tend higher. And anything related to oil, not good news. But hey, maybe it means a rate cut from the SAB in December. We can only hope.
Or at least just lower fuel costs at the bare minimum, right? So that's the very least we can hope for. I want to talk about that bond issuance that National Treasury has now put forward, the Euro bond, that is, right? So what does that actually say about South Africa's economy? That even though things are looking dire, we're still able to issue out a bond, and perhaps, the last time we did this, it did get oversold as well. Do you think we can get the same now?
Yeah, so let's unpack what a Eurobond is. Contrary to its name, Eurobond doesn't mean issued in euros. It just means external debt. Yeah. I don't know who came up with the name, but anyway, we issued about 74 billion rand. It was $5 billion worth of bonds in the international market. Investors are saying we'll pay around about 5% for our debt, which is expensive compared to US rates, which are closer to zero. Yeah. But it's a lot cheaper than it was last year, which is actually good news for us. The big risk is, we're paying back debt in dollars. So if the rand weakens, the rand amount of debt increases as well. Luckily for South Africa, the amount of debt denominated outside of rands is very low. And that's one of the reasons why our debt has actually stayed in investment grade, is you don't get the spiral effect from a weakening rand, which most emerging market countries have. So in vote of confidence from investors, lower interest rates help us. Of course, if you have a look at our budget, interest is one of our biggest expenses. I think we spend over 150 billion rand a year. I stand under correction just on interest. So lower payments is good news for everyone.
Yeah, certainly going to be interesting to check that one out. Michael, really appreciate the time. Thanks you so much for that. 1.65% down then for the JSE All Share as it continues to get some sense of weakness then across today, perhaps playing catch up as well following that Heritage Day break here in South Africa.